Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro dollar. A second bearish black crow yesterday after events over the weekend. Initially a move up over the October 2021 high and just over the mauve medium moving average. That's currently at 116.97, but then a long drop down back below both of these, as well as the gold long moving average, which is currently 116.72. Then the bright red lower bull channel line of the mid 2025 based bright red shallow bull channel, currently 116.22 to 121.01. This pattern had been the main showrunner for this market since the middle of last year. We also punched down through the November 2020 low, 116.02, and the 2019 high and prior 2026 low, both at 115.70, before turning back up to close just underneath the now breached bright red lower bull channel line. Now, this is a major breach lower, and unless prices revert higher, and soon, will be a major impact on this market. Additionally, this is now a second consecutive close below the late January to date descending wedge pattern. We have already reached the primary target X in the 116.12 zone, though we still have a much harder to reach secondary target X1 down at 113.56. Additionally, this move lower had revived the very lopsided double top idea I'd floated over recent weeks. Both the primary target in the 116.76 zone and the secondary harder to reach target X2 down in the 116.01 zone have now been reached. You will note I used the lower February high as my measuring point for that rather than the much higher late January high. And this is because of my conservative nature in such things, and I'm happy to stick with that. Further below is some close congestion between 114.82 to 114.95, which are the January and February 2022 highs, followed by the June 2020 high at 114.22. And a nearby purple neckline extension to the August to September 2020 head and shoulders top, though I'm not sure how good these last two are. And so far today, down to the 2019 high and capped for a while by the breached bright red lower bull channel line, but since moving back over it and now moving towards that gold long moving average overhead. Cable, aka sterling against the US dollar. A second bearish black crow yesterday after the previous session's combined bearish opening black Mariboso and bearish engulfing pattern, as well as the events over the weekend. Another strong move lower after an earlier attempt back up towards the 2024 high at 134.34 and the gold flatlining long moving average, currently 134.43. Prices pushed down through the flatlining mauve medium moving average, which is currently 133.97, as well as the bright red lower trend line of the late January to date descending wedge pattern, currently 133.49, along with the purple neckline extension of the small April to May 2025 head and shoulders continuation pattern, which is currently at 133.17, along with the nearby bright green neckline, currently 132.99. for the August to October 2025 head and shoulders top, and the March 22 high at 132.98 for January this year. So altogether, a significant new dynamic band, which is currently 132.98 to 133.17. Prices dipped even lower through the combined August 24 high and 61.8% Fibonacci line of the June 16 to September 22 move, all at 132.65. Finally halting at the 38.2% Fibonacci line of the June 16 to September 22 move at 132.46, though in truth, I think it was just ahead of the bright pink neckline for the August to October 25 head and shoulders top, currently at 132.36. Now below all this is a fairly free zone down to the congestion between 131.33 to 131.44. However, what has perhaps more interesting was the recovery from this move lower all the way to close up right on the bright red lower trend line to descending wedge pattern. Now, I had previously spoken about a lopsided double top pattern from mid-January to late February. The key level was the low 4 weeks ago at 135.06. We closed below that level late 2 weeks ago and again early last week. But there had been some big obstacles in the way lower. These obstacles have now all been dealt with by this big move lower. On Monday this week, we reached the primary target down in the 134.17 zone, but we still had a secondary harder to reach target X1 down in the 133 even zone. Well, yesterday the market also reached the secondary target, thus fulfilling this pattern's potential completely. However, despite this completion, the market having pressed well below the bright red lower trend line of the descending wedge pattern has still not triggered it or its targets below, because it has not made at least two, it's not even made one consecutive close below this pattern. It closed right on the pattern. Now, it may seem a minor detail in the scheme of things, but to me it is an important detail. I do not feel right in laying targets below for this pattern, not just yet. However, in the big picture, prices maintain their stance from the previously broken and now seemingly repaired very shallow dark blue bear channel dating between early July and early August last year through to late January this year. It's currently 129.72 to 135.99. Now, so far today, well, an early dip down to the previously mentioned dynamic congestion between 132.98 to 133.17, but we've pulled back up swiftly, such that we are back up over yesterday's close and just up under and challenging the mauve medium moving average right now overhead. US dollar against the Japanese yen. A second bullish white soldier yesterday after the previous session's combined bullish engulfing pattern and bullish opening long white Mariposa. Given the events over the weekend and Monday's action here, it wasn't much of a move in relative terms. Originally, yesterday's action was either side of the previous session's close, but the market chose to try higher and ended up closing just a few ticks short of the previous session's high. More importantly, we closed yesterday at 157.71, only one tick short of that early February high at 157.72 after earlier punching up through it. A very important point to note. You see, as I said last week, and this, and I quote, "This potentially is an important move higher." End of quote. And the reason why is that I have been continuing here the theme of a very lopsided double top seen in sterling against the US dollar, and even more lopsided double top in euro against the US dollar, and how we might have here a double bottom. Thus, the key level to watch for had been on any significant move up over 157.72, something I asked you all to keep in mind. Yesterday, prices reached up over 157.72 for a second consecutive session, but once again did not stabilize over it. Thus, as I said yesterday, and I quote, closes, the plural, closes over this would set up the opportunity for a possible double bottom pattern. End of quote. And even now, I would not feel comfortable in setting potentials or targets on the target side, not yet. However, looking overhead and in the big picture, we still remain within the previously breached but seemingly repaired bright red April to November 2025 bull channel. And that's currently 151.79 to 158.61. However, I also drew last week a new, slightly steeper September and November 2025 to date bright green bull channel. It's currently 153.13 to 160.80. And I continue to wonder if this will take over the bullish incentive in this market. Meanwhile, looking below, we have support a little distance below from the green short medium moving average, currently at 156.10, the mauve medium moving average, currently 155.44, and in between the June 1990 high at 155.78. So far today, an interesting lower open, an eventual move lower, looking like a bearish below the stomach pattern right now. US dollar against the CNH, the offshore Chinese yuan. A third and quite large bullish white soldier yesterday when compared to the previous sessions and the events over the weekend. The market started where we left off from the previous session on the broken lower bear channel line, currently at 689.78 of the shallower and broken bear channel, dipping down towards the significant 50% Fibonacci line of the February 22 to April 25 move at 686.60, but eventually avoiding testing it and moving higher all the way up through the broken upper bear channel line. So it's gone from one end of the channel to the top end of the channel, and that's currently at 693.39, and significantly over the interesting bright red trend line extension, currently at 693.42 of the May to August 2022 ascending triangle, to be finally halted just a little higher by the descending green short medium moving average. It's currently at 694.38. Prices pulled back lower, though not by that far, as we finished roughly midway between the broken two sides, the upper and lower bear channel lines of the shallower bear channel. The recent action has elements of a bullish diving board pattern, with the last 2 days being the pull up after the dive. This is a significant bullish reversal pattern and the first bullish pattern of note for quite some time here. Now, so far today, capped right now by the bright red trendline extension and pulling lower, such that we are on the verge of a possible bearish engulfing pattern or bearish double right now. US dollar against the Brazilian real. A bullish opening long white Mariposa and second bullish white soldier after the previous session's combined bullish engulfing pattern and bullish opening white Mariposa. Prices rose up from the open through the dark blue middle tine, currently at 519.76, of the important dark blue mid-December 24 to mid-April 25 bearish shift pitch walk. It's quite an old one, this one. As well as lesser Fibonacci lines at 524.07 and 527 even, and 532.15, as well as through the declining green short medium moving average, currently at 531.38. To be finally stopped by the declining mauve medium moving average, currently at 534.09, with above this the declining gold long moving average not too far, which is 540.11. The halt prompted prices to fall back down somewhat to close just under the 38.2% Fibonacci line of the October 2018 to December 24 move at 527 even. Despite this move up, the long-running dark blue bearish shift pitch hawk is still the excellent showrunner here for this market. US dollar against the Mexican peso. A fourth, much larger when compared to recent sessions, bullish white soldier yesterday. Prices punched up and closed over a number of resistances that are now supports, notably the dark blue November 25 to early March this year bear channel, currently at 1699.87 to 1744.94, and that's the showrunner here since late last year. Also the upper time currently at 1748.40 for the bright green April to November 2025 bearish shift pitch hawk. The green descending short medium moving average currently 1753.46, plus the July 2017 high at 1743.74, and another small congestion further up between 1756.95 to 1759.58, containing the combined August 2017 and July 24 lows at 1759.58. We closed above all these, but the cap on the market was a declining mauve medium moving average, currently at 1789.46, which stopped prices dead and forced a small pullback, though not as far as the previously broken resistances that have become supports. So far today, a small attempt higher, but now a move down to test that whole congestion band I've just mentioned of newly mined supports from the resistances of yesterday.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.